I'm wondering, like, I find it interesting that BTC did not move as much as it would have in the past. I'm like, is it becoming more resilient to these types of events? Like, is it taking on more gold-like properties, which would be nice? I don't know if that's true, but it is interesting that after these sorts of things resolve, BTC does seem to just revert to trending back up. Like, it kind of has the same, obviously not same magnitude, but same sort of structural bid where it's like absent bad news, the default is kind of us trending back up.
What's going on, everyone? Welcome to SPSP, episode 7. We're here with the Enterprise boys. Lots been happening. We got CLOBs, we got perps, we got the impending end of the world, possibly. So lots and lots to cover today. We're going to kick it off with our dear DeFi monk, Sonny, and ask him, what is a CLOB and why should we care?
All right, I guess that's all the context we're going with. Yeah, the CLOB wars right here. It looks like it's finally one of the narratives that is kind of making its way to whatever the current zeitgeist and meta of CT is. I've been shilling CLOBs for a long time. You know, I am a firm believer that this is going to be a real narrative that matters. And clearly, there's a lot of differing takes on CLOB design and the nuances of it. You know, I had a very public back and forth with Mert, Toli, Kyle Samani on what it takes to build a CLOB on the Solana L1. You guys should definitely check those tweets out. I think some really, really incredible takes there by all types of different people chipping in on both sides. But yeah, they're here. I think, you know, you can check out my report on it live on Messari's research website for enterprise clients. But basically, like, I think if you look at crypto asset trading, which is really where you want to be. Like, you want to be an app that facilitates trading volumes in some way, because that consistently generates the most app revenue, it generates the most economic output, and it's the thing that crypto users on chain today are most interested in doing. And so if you look at how trading is facilitated today and historically, it's mostly through AMMs. Sometimes it's through peer-to-pool, sometimes it's through RFQ. And I think that these exchange designs have basically, the reason they're so prominent is not because they're better than centralized exchanges that run on order books. You know, all the largest exchanges in the world do run on order books, the NASDAQ, the CME, Binance, etc. But it's because, like, blockchains have just been too slow and too expensive for us to put an order book on chain, which is why we've resorted to AMMs or off-chain order books of some kind. And I think Hyperliquid just came in and broke the sound barrier. Not to say Hyperliquid was the first to try to build an on-chain order book. Like, Serum was an on-chain order book on Solana. Ether Delta was arguably the first on-chain order book ever attempted on the Ethereum layer 1. But if you want a liquid order book, you have to have market makers and you have to have takers. And for the most part, I would say order books of the past, at least on-chain order books, did not do a great job at being able to aggregate those two facets to no fault of their own. Like, block times were too slow, latencies were too slow, transaction costs were too expensive and variable. But with Hyperliquid, I mean, clearly you're seeing that this is like a type of application that has incredible PMF to the tune of like almost 20% of Binance's volume share and OI share. And if you want to compete against Hyperliquid, you're going to need to make similar trade-offs / take on a similar design to them. And so the answer is really to just do it as an order book. And, you know, without going into the nitty-gritty of what an order book actually is and what all the components are, it's just an incredibly simple way for both a taker and a maker to express their view on pricing and how they want to transact with that view of pricing. And so, you know, we figured this out in TradFi. This is how exchanges work outside of crypto. And now we're figuring it out on chain. So for the first time ever, you know, we can kind of look at this problem and say, oh, we might actually have a solution. And so who are the on-chain CLOBs today? I've spent pretty much all my time recently looking into this. And I basically think in the same way that Sol, Luna, AVAX catalyzed like a wave of alt L1 investing and all this focus on like alt L1s, with 99% of alt L1s basically dying and fading off. But the ones that stuck around, like Sui, Aptos, etc., are clearly finding some sort of niche. They're carving out some sort of space for themselves. In the same way, I think alternative CLOBs, whether it's Bullet, whether it's Fogo, whether it's a CLOB on Solana, whether it's a CLOB on Mega ETH, GTE, Valhalla, etc., I think they may start to find their own niches and start carving out some space. And, you know, Hyperliquid right now, on some weeks, has 90% share of the on-chain perpetuals market. And that is just, we've never seen a crypto incumbent come in and take 90% plus share and maintain it for like 1 year, 2 year, 3 years. It just seems to be like a fact. And so if Hyperliquid is on-chain Binance, who is on-chain Bybit, who is on-chain Coinbase, who are going to be the players that are making unique design choices to compete with Hyperliquid on a grand scale. And I don't think this will materialize like any time in the next few months, but I think it's probably going to be like a battle that takes years. But it's at least worth paying attention to now, like who's up next, basically. Like I think that's the juxt of the CLOBs narrative and why people should care. I think a lot of value will be created in these alternative CLOBs.
Yeah, I think we've seen the chain wars for the last few years. I think that's been kind of at the center of crypto, trying to figure out who's going to win market share, where applications going to build. Seems like Solana won a lot of market share this cycle, but even that's still up for debate, right? I think it's going to take years just to see who wins the chain wars. So I'm curious, do you see the CLOB wars unraveling in a similar way? Like, we've had the one chain rule them all thesis. We've had multiple chains dominating their own little niche. Do you see CLOBs, and this is for everyone, having the potential to be the same, or is it going to be a different outcome?
It's really hard to say. Look, I think there is a world where Hyperliquid just eats everything, and maybe it stays that way. Like, I think perpetuals particularly is an example where your moat just keeps getting stronger. Like liquidity begets liquidity, and you don't need to be on any specific chain to launch a per product for a specific token. You can just do it. And so maybe Hyperliquid just starts aggregating everything. But I do think that there are different like trade-offs one might consider, like composability with other ecosystems. Do we want to be close to Solana? Do we want to be close to Ethereum and the EVM? Do we want to be closer to other chains? Do we want to be on a general purpose L1 directly? Do we want to be on a general purpose L2 like Mega ETH directly? Privacy, like I think that's clearly one thing that people are arguing about, is whether or not privacy matters for an order book. There are some interesting design choices being made by other players to try to preserve privacy in more of a concerted way. And then there's just the fact that like crypto is an incentives game, and all of these players will launch incentives to get initial adoption, and some of them will stick. People will kind of find a product that they like and just stick around using it. People might want more decentralization out of their CLOB. I think evidence so far is saying that does not matter. But if it does matter, like what are the decentralization trade-offs that Hyperliquid is making with its co-located validator set that other players might be able to address? And so I think there are like all these things that make for an interesting melting pot of like potential competitors that can find their own claim to fame. I mean, you're not going to beat Hyperliquid by doing exactly what Hyperliquid did. You have to try to do something at least a little bit different. So yeah, I'm curious. I think it's still very, very early innings for this narrative, but I think there could be like a diverse range of different players. But like alt L1s, like to assume that like the market has enough room to support 50 of these protocols each doing what Hyperliquid is doing is just not possible. Like it's going to be probably 2, 3, 4 max other players. At least that's what I think.
How deep do we want to go down the CLOB rabbit hole for this podcast? Because we could do it for like 2 hours if we wanted to. But
I think we should go fairly deep, because this is like, I think like the talk right now. It seems like on crypto Twitter.
Okay, I could talk a little bit about what happened with like Toli and the Solana folk if people are interested. I think like basically, I think it's an yeah. Go ahead.
I was gonna say we could tee it up with like, it seems like the most interesting CLOBs at the moment are owning a large part of their stack. Like we haven't really seen them come up on general purpose chains yet. So, I imagine that if Hyperliquid existed on Solana, people would be really happy about that. People would prefer that. But I guess why don't you think that's happened? And, what's the time frame to getting there?
Yeah, so we think of Solana as a performant general purpose L1, right? Like compared to other L1s, Solana is pretty performant. But even Solana, I would say it's an objective truth today that you can't build something like Hyperliquid on Solana. Like there's too many variables. You're dealing with toxic takers trying to snipe market maker or stale quotes with Jito by paying like $1, $2, $3, an unsustainable amount for market makers to try to keep up with. You're dealing with jitter, basically all of this latency variability that comes from having like random rotating proposers. You're dealing with congestion, noisy neighbors from Pump.fun and all this memecoin activity going on across the pond. You're also dealing with the fact that like market makers, at least at the most elite level, want to in some way co-locate with their service providers so that they could get their end-to-end latency down to as low as it possibly can be. And that's just not feasible right now with Solana's current consensus mechanism. And so, yeah, I think basically That was my point, is that you cannot build this on the Solana L1 today. If you can't build it on Solana L1 today, isn't a good halfway measure to support like a network extension that can launch soon and compete with Hyperliquid right away in Bullet. But if your fundamental view is, hey, Bullet brings no value to us as a network extension, rollups are parasitic, and we want to make sure that we get the L1 performant enough to compete with Hyperliquid directly at some point. That's a fair take. I think that's a completely fair take. But to pretend like this is like that you can even do this today on the blockchain, I think it's just ignoring the fact that multiple builders and teams have tried and haven't been able to build like a performant CLOB, on-chain CLOB on the Solana L1. And they're either changing their mechanisms to kind of retrofit their initial product into the limitations that like they have to deal with on the Solana L1, or they're like moving off entirely to build like a network extension, et cetera, et cetera. And so it all just depends on how long this takes to resolve, right? Because if you think instant inclusion, like and multiple current proposers and app-specific sequencing, where you can prioritize cancels on Solana L1, like if you think all of those things can come to market quickly, then yeah, by all means, that is by far the highest ROI investment you can make as Solana. But you don't want to give up too much time. Like you don't want Hyperliquid and these other players to build up too much of a lead, because it's going to be incredibly hard for you to win back this use case if you've let it run rampant for like a year or so. And so if the timeline to delivery on all of those things is like a couple of months, yeah, like go for it. If the timeline to delivery is going to take much, much longer than that, then I don't know. Like, yeah, maybe a network extension isn't a terrible idea. So that was kind of what I was getting at with like the tweet exchange back and forth.
Makes sense. All right. So aside from CLOBs, the other big narrative that we're seeing on CT are stablecoins. Plasma has gotten a lot of hype, being the stablecoin chain, having native integration of Tether and getting a large endorsement from one of its co-founder. We're seeing the large banks starting to, there are rumors, not even rumors, I think news that the banks are launching their own stablecoin network. We're seeing also Anchorage, Robinhood launch a stablecoin. We have Andrew Dyer here writing the grand stablecoin Bible coming out in the next few weeks as well. So want to ask, how do we feel about stablecoins right now? I think it's more targeted at TradFi, very different use cases than CLOBs, who are more on-chain traders and degens. So where do we see stablecoins right now? Where's their opportunity, and where are things going?
Yeah, so there's like new headlines every single day about like some new entity that's going to become an issuer. I think last week there was Amazon and Walmart were looking at the opportunity. I think for merchants, obviously, if they have the size and resources to do something like that, I think it makes a lot of sense. Obviously, they want to get around like paying card network fees. And like for someone like Amazon that's super cost focused, or maybe even someone like Costco, like just any opportunity where they could like get 2 to 3% cost savings and pass some of that back to consumers, that's like pretty huge opportunity. I think for like merchants and retailers, there's like a lot of unique or innovative things I think they could do if they actually issued their own coin. Obviously, like they could possibly like create their own ecosystem with like suppliers and distributors, maybe force them to use it, and then they have this additional like revenue stream that they're making off of the float, and maybe more precise and faster control over their working capital, which is always a plus. Then we're seeing like bank headlines as well. Like JPM is just put out something. I think they're like trying to launch JPMD. We've seen like consortium headlines also in the past, but like pre-Genius bill. I think there's a weird scenario where if stablecoins actually get like significant adoption and they become the preferred method of saving among consumers, it could be kind of damaging to bank deposits. And if you look at the Treasury's latest stablecoin report, that they pointed out that scenario where like they are concerned about stables eventually pulling consumers away from commercial bank deposits. But I think that's a long way away. In the meantime, banks probably just want to find ways to incorporate stables into their product offerings. And maybe near term, what that does is just put upwards pressure on saving accounts rates, which are like are super low and always near zero somehow. What else do we have this week? Stripe Privy, which was pretty huge. I think Stripe now, they have like this end-to-end product offering where they have the banking as a service, they have the virtual cards that they already built out like that infrastructure themselves. And then obviously with Bridge, they got the stablecoin settlement. And now they have these embedded wallet APIs through Privy, which kind of completes, it's like the last mile of this like stablecoin delivery, or like going from fiat to on-chain to fiat. So just being able to embed wallets into any payout or checkout easily seems pretty huge. I think we're going to be seeing more of that across the board. I know there's other services like Mesh and Shopify is now integrating USDC into payouts, so you can just easily pay with wallets. I'm personally very bullish on Stripe possibly dominating this space. I think they have the infrastructure built out on the payment side, and now they just kind of need to build a moat with USDB, like actually getting distribution with merchants. It will be interesting to see like which network effect, like you have Stripe starting from its payment network and infrastructure that it's already established. And then on the other hand, you have Circle that has established itself like on the SEC side and has like wide distribution with like crypto native users, but doesn't have necessarily wide distribution with everyone else. And it'll be interesting to see how fast Stripe catches up, and also how fast Circle catches up on the payments network side. I haven't seen too many stats yet on Circle's payment network, but that's definitely something I'm watching. And speaking of Circle, I think they hit like $150 today. Honestly, wild IPO market. Circle's now trading at like 37 billion market cap. It's actually kind of closing in on Coinbase, which is interesting given that they're like handing over 60% of their rev to Coinbase. Someone said it's trading at, I think, 160 times last 12 months earnings, which if I had to guess, like pre-IPO where this would be trading at, I would not have been that bullish. But clearly there's a lot of TradFi demand. There's like a little bit of froth, I think, in the IPO market, just more broadly, like even outside of like fintech stuff. CoreWeave has tripled off its IPO price. Chime Financial, which does like kind of like a neobank, I think they target like lower income consumers that are trying to build out credit. I think that went up 50% on its first day. So definitely interesting time for like crypto companies and fintechs in general to be IPOing.
Yeah. So obviously, seems like TradFi, at least markets, have an appetite for stablecoins given the Circle IPO. Do we think we'll see a narrative emerge within crypto for actual tokens that are derivatives of stablecoins, or do you think it's going to be mostly confined to IPOs and public equity markets?
I think there's an opportunity. Obviously, Plasma was like super oversubscribed. I don't think people will really want to bid older coins that have the narrative. Like I'm a bit skeptical of people bidding Curve or Frax, but anything that takes on this narrative of pure play stablecoin, I think you'll just have people making comps to Circle, and the higher that goes, I would just turn off my thinking and just buy those things. And then I think there are some slightly older protocols like Maple Finance. Their new Syrup USDC has been doing really well, and that's like, I don't know if I would call that a pure play just because there's some like private credit involved, but I think there's a lot of opportunities for new protocols coming up to take advantage of that trend and narrative. We're only going to see more of it, honestly. So, and I imagine some of those valuations could get kind of silly even if they're a bit untethered from reality, but market likes to trade on narratives. So
Yeah, let's. Ken, did you have something?
Kind of. I guess when I think of, or when I'm conceptualizing stablecoins a lot of the time, it feels like there's a guaranteed not arms race, but we're going to have everyone and their mother issuing a stablecoin if they can. And I think that's definitely going to happen. But then I'm always interested in trying to figure out, like, does that make sense? Like, is that going to be the world that we live in where there's 1,000 stable coins or 100 stable coins that we're constantly interacting with? And like, no one has that answer, but just given that Andrew's been looking at it, do you have like a gut sense of, no, we're eventually going to consolidate into 2 or 3, or like, are we going to live in this walled garden world where like kind of the infrastructure, I don't want to call it an infrastructure play, but maybe like a Curve actually does do well because that becomes the way to transfer between all these without a lot of slippage. But yeah, I'm kind of interested to get your gut take.
Yeah, I'm a little conflicted because the incentives are there for everyone to just launch one and take advantage of whatever float they get while rates are this high. At the same time, I think different categories of issuers will have slightly different incentives. So like the Amazons and Walmarts won't be treating it the same way as say like a Robinhood or Kraken, and like they might want it to be more of a walled garden, like if it's among their consumers and suppliers and distributors and they're having people use it to either just like they don't really want to use it or create one as like a financial product. It's more of like this intra-company private money that they can take advantage of. But on the other hand, the fintech companies, like a lot of the ones backing USDG, like that entire consortium, I think they do have an incentive to aggregate and consolidate because they are fighting the much larger network effects of USDC and Tether. And so there's like a good incentive to do that. And then from a third angle, for banks, I actually don't. Obviously, they would want a piece of the pie, but I don't really know what the end game is because for them, if they want to compete on like a yield bearing stable coin, they're kind of eating into their own margins by doing that. Obviously, like they don't really want stablecoins to become a preferred savings method and being forced to pay out that entire yield that they're getting with people who park money into their basic savings accounts. So yeah, there's like different incentives at each category of issuer. I do think we're just like, at least in the next year, we're just going to see a ton more. And whether that makes any sense in the near term, probably not. And then maybe we'll see if there's like a rebundling of sorts.
Seems like I'm just getting ahead of my skis a bit.
Well, it's also like for banks, it's probably something they're forced to pay attention to because obviously like all the payment networks are getting involved, and then even these random retailers are getting involved. So they know they need to pay attention to it, but then market sizing wise, it's still very small, like 250 billion in market cap compared to say, I think, the bank deposits at JP Morgan are an order of like 10x, what the stablecoin market cap right now. So yeah, it's just they're like forced to pay attention to it, but it's also not big enough for them to care that much. It's a weird spot. But obviously, stablecoin market cap, it's probably one of the few charts you can bet on being up and to the right in the next
I think,
5
like,
years.
in general, when there's a gold rush for a new product, there's always hundreds or thousands of new companies spinning up, trying to win whatever share they can. So you've seen that with cars, you've seen that with banks when they first emerge, and they always consolidate around a few dozen or even less than 10 very large players. I think we'll see something similar with stablecoins. I don't think we've really hit the gold rush yet. I think that's coming next year or two. We're just in the first few innings, but I doubt we'll have a future of thousands and thousands of viable stable coins. Yeah, I want to move on to markets next, just broadly. What are we seeing? We obviously have a lot of macro uncertainty, tensions in the Middle East. I think seems like crypto markets have largely responded well. Equities don't seem like they've reacted too much either. How do you feel about markets in this environment, and how do you feel about what's coming next?
I was just looking at my Zex token and very happy as of 5:15 Eastern time. Hopefully nothing changes. Yeah, I was actually just looking at because I got into like a pitter patter with Simon from Moonrock Capital about like whether hype is overvalued, because he was like 50 billion is crazy for hype. And objectively, when you say it, it does kind of sound crazy. Like I was looking at the market caps today, and it is wild that hype was able to run to like $50 billion FDV, like in a time that was very, very volatile and rocky. Like I don't think this is like a typical bull market type of smooth up only trajectory across a broad selection of alts. So yeah, at least on chain, it looks like the quality names people are like kind of winning. Andrew, what about the war though? How's that going to resolve?
Yeah, I'm glad we didn't film this on Friday where all of our takes would have been completely wrong by Monday. Yeah, market wise, like S&P's back to sub 2% under all-time highs. I think oil's still up a bit from the initial initiation of the war, but I think it's faded like 30% of the move, and it also seems like the left tail outcomes where the strait is blockaded and oil goes to 100 plus, those scenarios kind of seem to be off the table. VIX is back below 20. Gold is hovering near all-time highs, but it's given up some of its gains. For now, it seems like we cut off the worst case scenarios. Ironically, Bitcoin moved more on the Trump Elon feud than it did on this like
Dude,
intercontinental
I was
ballistic
I was
missile
so
war.
confused about that. I was like on
I
vacation,
was confused too.
like lost service for like 5 hours. I came back to like everything just completely in the red, and all I could trace it to was just Trump and Elon beefing on Twitter.
Oh
Do you
yeah,
have
yeah,
any
yeah.
like theories as to why that was such a volatile event for just crypto? So I felt like equities did fine.
Well, I remember on the day it was like the main stock that was impacted. Obviously, Tesla was down like 20%. I don't know. I think there was a brief moment there where people were pricing in some weird scenarios where like Trump gets ousted, and then I don't know. There's a whole bunch of uncertainty, and obviously that would be not great for markets. And that now everyone's just like forgotten about it very quickly, and they've moved on, as with most things. I'm wondering, like, I find it interesting that BTC did not move as much as it would have in the past. I'm like, is it becoming more resilient to these types of events? Like, is it taking on more gold like properties, which would be nice? I don't know if that's true, but it is interesting that after these sorts of things resolve, BTC does seem to just revert to trending back up. Like, it kind of has the same, obviously not same magnitude, but same sort of structural bid where it's like absent bad news, the default is kind of us trending back up, and we're still getting like even amid all that uncertainty, we're still getting 9-figure inflow days from the ETFs. So I don't know, things are looking pretty bullish now that this. I wouldn't say this the war FUD or war risk is entirely over, but it seems like we've been de-escalating based on the past days headlines.
What? Why? Like,
And
it doesn't. I think
Why?
like if you look at the incentives, there's like Israel has like two outcomes: either annihilate Iran's nuclear program or do regime change. From what I read, it's very difficult to just outright destroy the program, just because everything is like, or a lot of it is stuck deep underground. And I doubt that's really their goal. I don't think that's a realistic goal. I think, if you get any level of peace, like it wouldn't be too hard to get back to where they are today. But yeah, that doesn't make sense. And then if it's regime change, like that would concern me a lot because that feels like a lot of instability. It'd be riling up rebel groups and doing more and more assassinations. And I don't know, like how long Iran can just withstand that, or maybe they just have literally no capability of responding. But I guess the markets things are just going to die down, which doesn't make sense to me because I think Israel just needs to push as hard as they can right now from their perspective, and that leads to a very uncertain outcome.
Is there not another scenario where we just push it off another 10 years?
I think that's viable, but that's what Iran wants. Like, that's why I think they're trying to de escalate because they think what they really have to lose is regime change. Like, I don't think they're actually that worried about their nuclear program. So, if that's the case, Israel needs to be very aggressive. And I guess the markets are saying without US support, like they'll just have to basically come out with the damage they did. But that doesn't actually change things materially from a geopolitical standpoint. Maybe it sets Iran back a few years. But even that, like, it's unclear. So I don't know. I think like that's what markets seem to think, but I don't agree with that assessment. Markets are wrong.
Send it back down.
Oh no, it's one of those things
Yeah.
where I feel like I have no edge, so I'm just going to assume the
That's
market's
your
right.
edge.
Yeah.
Yeah. I mean, I feel like even with tariffs, like you could have argued, like you could reason through having more edge in that in those like arguments, but war and geopolitical tensions, zero edge. So I'm just gonna trust us floating back to highs and the VIX going down and oil fading as signals of smart people telling me it's over until the next wave of exogenous shocks hit. Yeah. What else we got market wise? I don't like if we stop focusing on the war stuff, I don't know. Like we've completely overrode just all of the Trump reinstating like what the 55% tariffs. Like no one cares anymore. It's like no one cares about the actual level except for the fact that he's kind of pulled back and shown his hand like that, I guess. I guess the next thing on the horizon, assuming I don't, and I have maybe Dylan's right, maybe there's re-escalation, but assuming that's off the table, there are like other worries for stocks and risk assets. No one's really talking about how labor market kind of continues to weaken. last CPI was super cool, which might just mean growth is stalling and we're not getting rate cuts most likely at this next Fed meeting on Wednesday. And we might only get one by like September. So, but yeah, thus far, market does not seem to care about those things. So, and Bitcoin looks poised to make a new high soon, honestly. We're like 3% off.
Is there a place where we can bet on Jerome Powell coming out and saying absolutely nothing?
Well, you could bet on Fed funds futures, which are basically pricing in 99% chance of nothing. So if you want to make 1%, that'd be fun.
Doesn't sound worth it. But I'm working on my REV report now. Like, it's going to go out this week. And basically, I'm just tracking correlations. And the market's completely flipped from using chain GDP to using REV as their FDV metric. So like chain GDP used to be highly correlated with FDVs, and now it's basically gone to zero, and REV is just gone straight up in terms of market correlations. I don't know if that changes what you were going to say.
The big L1 valuation framework debate persists. Is it monetary premium? Is it based on REV? Is it based on demand for economic security? Which it's clearly not. Kenji has a lot of thoughts. He has a big report coming out this week. What are you seeing in the data, Kenji?
Yeah, so I feel like we've all been talking about REV from almost a ideological lens of like why we think markets should value something based on REV or GDP or economic security. And no one was just going in and looking at, well, what's the market actually doing? And so I just did a huge correlation analysis of looking at all these different metrics. And it's kind of interesting. It seems like the market is converging on REV. You look at REV correlations to FDV versus like chain GDP correlations to FDV. And GDP undoubtedly used to be the dominant factor, but it's basically fading into irrelevance versus REV staying pretty solid. There's like a 0.7 average correlation across major L1s. I think it's also interesting looking at ETH specifically because ETH had this weird moment where it was the home to all activity. So like GDP and REV were pretty tightly correlated. But after Solana stole meme coins away from Ethereum, you basically had most of Ethereum's application GDP coming from things like lending, which like has significantly less transactions on that quote unquote revenue generation. So like the REV trends down while the GDP trends up. And so it's an interesting case study to see, well, where did ETH FDV follow? And it followed the REV as opposed to the GDP. So it seems like markets are converging on that lens. You know, is that going to last forever? Who knows? But it definitely seems like that's the direction we're going in. I think it makes a lot of sense too. I think you can draw the analogy that like chain GDP, monetary premium, like that's almost analogous to like a PS ratio, like a price to sales ratio, which says like how much activity is here, but tells you zero about, you know, how much is the chain actually earning. So like your PE ratio is a lot closer to REV. And so it feels like we're kind of moving down the line items and getting closer to what actually matters. I guess that's the main point. Like there's other interesting aspects of how are multiples acting. I don't have a view on like this is the multiple L1 should trade on, but I think when you look at the dispersion of multiples, they're actually very rational. So Tron and Solana trade pretty low. It used to be like 45. I think it's up to like 55 now. It's still volatile. And those are the lowest ones. But I think the market also kind of assumes those are the least defensible use cases in terms of Tron has stable coins. We're seeing a ton of competition come there. So it makes sense that you'd expect Tron to not continue to dominate that anymore. Solana, you know, we know it's mostly meme driven. There's always been a question of how defensible, how durable is that use case? And then you compare that to things like Ethereum. There's a little more diversity there. There's a higher premium, higher multiple. I think you can also argue like the monetary, or how would I say it? You can also argue that people who believe in the monetary premium are slowly exiting that market or getting washed out. So that multiple is going to keep coming down. And then you look at the small L1s like Aptos or Avalanche, and let's say you assume Solana is trading at the correct multiple, which like is a big assumption. You can start to comp what type of growth are markets expecting for these smaller L1s. So Aptos has like very little REV, but if you use the Solana multiple back out implied growth, it's basically the market's basically saying we think it can get to 5% of Solana, which like that's like one super good app. And I don't think it's out of the question that Aptos can grab a super good app. You look at Avalanche, it's pricing in like 10% of Solana's current REV. That's like 2 subnets. So I think there's a lot of rationality to the way these things are trading, at least on a relative basis. And then we're also seeing the market just converge on REV is what matters. I don't know if anyone has any follow-ups there. Did we just kill the REV debate? Did we do it?
You should definitely invest some time into this Twitter thread, man. think it's gonna be interesting.
So here's my
I'm
question.
not a big Twitter guy.
Okay, I can buy REV for everything that's not a major L1 or alt L1, but I just don't see like how you could ever justify like multi-$100 billion valuations off REV. Like I don't think they can ever generate those kinds of cash flows. That's my opinion.
I mean, so
But
do you
like-
think
But
45x?
Solana's trading lower than
What's that?
Circle.
Yeah.
Like, yeah. I mean, Solana, if you use REV as the PE, it's cheaper than Circle. It's cheaper than Tesla. It's cheaper than a lot of things.
Yeah,
out
but
in
what
the
I'm saying is
market.
I don't think there's realistic upside on generating more fees where you can justify a higher valuation. Like Sonny will say, okay, it's at 45 right now, but I don't think Solana can actually grow its business that much based on further fee compression. Like I get the whole volumes will exceed fee compression, whatever. I don't think that actually makes much sense. I think like Solana is capped at a 2-3x max based on REV, which maybe that's fine, but I'm not seeing the 10-20x. I think a lot of people still want to see in Solana.
This just in, Dylan is bearish on crypto. It's new information to me.
I don't know if I'd agree with that characterization.
I mean, so do you think 45x is? So you think 45x is overvalued? Like you think that's a irresponsible multiple for Solana to be trading at? Relative
Yeah, I
to
think
REV?
upside is not high enough because like the idea of Tesla having a way higher multiple is that Tesla can tap into the entire electric vehicle market, hundreds of trillions, robots, whatever. Like the TAM is just so much larger, and I don't think being an L1 just based on fees and not take into account monetary premium that arises from being a dominant L1, I don't think you have that level of upside.
I mean, your argument's more that like margins basically compressed to zero, right?
They compress
Like, there's
enough
gonna be
where I don't
activity.
think there's a lot of upside left in these large L1s.
And you don't think that Solana can grow like volume / activity / transactions by 5-10x in its lifetime?
Well, maybe, but my argument would be first, fees will compress, and second, the markets will rationally reevaluate these L1s based on rev versus monetary premium, as I think it is right now. Because look at NASDAQ, does a lot more transactions in Solana, and it's worth 47 billion, right? So I think if you actually go on that logic, it'll just re-rate down in the long run because people will stop considering any other further upside. Basically, Solana's valuation would become grounded in reality, and that would kill all the multiple premium.
But is that, I guess what I'm trying to say is we can use REV as a metric. The market can align with REV as a metric, and these assets could just be overvalued. Is that better than trying to fit in like monetary premium / economic security to justify overvalued like asset prices?
I don't disagree. Like, I think you could use REV and say that it's overvalued, and that's fine. But then I think there's not much of a bull case. So anyone who's making a bull case for these assets and is claiming REV is the right way to value them, I think that doesn't make much sense. And that's what I'm arguing. So like REV might be right, might be how the markets will do it. I don't think it is yet. Maybe it is, maybe it isn't. But I think in the long run, it definitely won't be able to justify the valuation upside that we want to see.
Gotcha. Okay. So you're still bullish crypto and you think that monetary premium is going to come in and make things even more bullish for these L1 tokens.
I think for the top L1 tokens, the monetary premium is always possible. But everything else, I think REV is appropriate. Like it's a cash flow business. It should be valued similar to a stock. So I have no issue there. It's really just a few of the largest assets that are competing for this. And then everything else, I don't think, like you're pricing in the probability that somehow gets a monetary premium, but I don't think there's any chance of that in the long run. And I think an REV framework makes sense to price an upside. In other words, your upside, if you're at over 100 billion market cap, I think you can only hope for monetary premium to justify further upside, whereas everything else you should only be pricing in REV based upside. And that can be fine for like a $2 billion L1 or L2. Like I think you can grow based on REV, but I don't think you can ever be $1 trillion based on REV.
Yeah, no, I mean, maybe layer one tokens should just not be worth $1 trillion. I think that's probably going to be true. Unfortunately.
But see, the issue is like on cash flow based businesses, you're assuming like there's going to be tons and tons of compounded growth. And then one day when growth matures and stagnates, you distribute dividends, right? That's the long-term goal. And if cash flows can't actually increase that much for these large L1s, those dividends are never coming. And that's why the re-rate will have to happen down.
if we don't think an L1 could be $1 trillion asset, then like what's the point of proof of stake? Because you're kind of capped at how big you can grow. Maybe we don't want to go down this rabbit hole, but
security's a meme.
Yeah, fair.
Actually, you know what? Now that I think about it, I'm going to take that back. An L1 token will get to $1 trillion for a smart contract platform. I can see it. I mean, what Nvidia is at 3 trillion, right? 2 trillion. All these FANG companies now, trillions like freaking table stakes. So
Don't they have the TAM?
I mean, I think that potentially, okay, maybe not like a market that is fragmented with like 10 or 15 different L1 players, but if we do find like the L1 smart contract platform, like I think that TAM is pretty large. Like you could facilitate a whole number of different global transactions on there. You can build all types of apps on there, new internet, new payment system. Like I think it's a fairly large TAM, at least when I think about it.
It's like all of financial services, like theoretically.
How's all the
plus
finance.
DeepIn.
Yeah, how's all of finance, plus DeepIn, plus some consumer, plus whatever you want in there. Pump.fun live streaming, everything.
I mean, is it crazy to think too that like the narrative will just change when the price goes up too? Like if it starts trading a lot higher, then we'll be like, oh, okay, maybe this is actually like have a monetary premium on it, right? Then we kind of like start running with that narrative versus the REV thing. Like,
Okay, but that I don't think that's like what the REV people are arguing. They're arguing monetary premium is just inherently wrong.
yeah, I'm just saying like if price just keeps on going up, like
Well,
maybe
what
they'll
I'm
be
saying
like,
is you
oh,
can
okay,
only justify further upside by adopting a monetary premium outlook. If you don't, there's just no more upside, so you have no choice.
yeah, but that's what I'm saying. Like I think that the narrative of monetary premium might come as price goes up too, and then the REV people will be like, oh, okay, I guess we're totally right.
But then like I feel like that's like giving up to monetary premium all along.
I mean, monetary premium in and of itself is going to be like a reflexive valuation method. Like REV, you can use to anchor like a floor valuation. You can say that at this price, the amount of fees that are going back to Solana stakers justifies like X valuation. And so people will stake to capture those fees. So I think that could even be like your baseline if you're in the monetary premium camp. And then basically anything above that is just whatever the market thinks it deserves.
Well,
so monetary premium to me is just kind of mimetic. It just seems like a meme.
Well, if you actually do reach a certain market cap, like maybe you do just become an option for monetary premium. Like the larger of an asset you are, the more you can become a monetary premium. So there is some, I think, logic to that.
I don't know. I'm getting pilled by the Tulip King, where a monetary premium is like insanely rare. Like we've seen only a handful of assets ever gain it. And it feels wrong to bet that your asset that you hold is one day going to get that monetary premium, because history says no assets ever get it except for gold, the dollar.
But if you're looking at a $500 billion market cap, like you're in the running. Like how rare is a $500 billion market cap?
I mean, so is Nvidia. Does Nvidia have a monetary premium? Is it a store of value?
It might. Maybe that's being priced in.
For a frame of reference, I just Googled total market cap of global financial services, and it's 20 to 30 trillion according to Google. So crypto gets a percent of that. We got $1 trillion assets.
Yeah, my problem is if you're not giving me anything to work with here for monetary premium. Like there's nothing I can measure. You're telling me there's no KPIs I can track. You know, I have a very data oriented brain. Like with REV, like people from Blockworks are telling me how to measure REV. I'm having a hard time finding like a comparable rubric for monetary premium and how to measure it.
Yeah,
so I think it's like it is
I
very
mimetic.
Like
when seashells were the dominant form of money in various civilizations, how would you have assessed that asset? Why was it attaining a monetary premium?
I guess it's how many people are storing it and making purchases with it, and how much like value is locked into. Okay, yeah, you know what? I can kind of see. yeah. I was gonna say, but I think. Look, the monetary premium people. I think you need if you come back with like, here are the things you should be looking at to figure out whether a monetary premium is developing. I think it would definitely help me a lot. Try to understand.
Well, I think monetary premium people are actually tracking the exact same things as the REV people. They're just arguing that as a result of tons and tons of revenue and applications and the whole economy on chain that rivals a nation state one day, it will attain a monetary premium and people will just default to using the native token as money. I think that's the argument, and that will derive a larger premium than a cash flow based business's share of dividends. So you're tracking the same thing. It's just you can't like run a DCF on it. Like it's just kind of this like, okay, it's money now. So now like it has this level of utility. There's this level of demand for money. And as a hard data person, you're probably gonna have a hard time seeing concretely where it should be at any given point. Because I don't think you can just value money. It's kind of wishy washy. It's just a belief based system. It's almost a religion, right? So I don't think you'll ever be happy there. But you do need to consider that it's a possibility and that like things might, if prices irrationally increase, it might just be because it's monetary premium and REV is just relevant at that point.
All right, that makes sense.
All right. Any other topics you want to cover? Pump.fun got a big valuation from Sunny. I know Chris has tons and tons of thoughts.
On Pump.fun? I guess I have a few. Anyway, Sonny, you go. Talk about the value.
Yeah, 7 billion seems fair. Look, my thing is, if you want to, like, any way you slice it, if you want to build a valuation model for Pump.fun based off the money that it earns, it's going to be worth a lot of money. Like, it's going to be worth 7 billion, 10 billion, maybe even 15 to 20 billion dollars. Like, it's the most profitable application crypto has ever seen. And if you use any sort of like a reasonable multiple, even on top of those revenues, you're going to get like some pretty staggering like market cap projections. And I don't think we went too overboard. Like we projected out revenues for 2 years based off of the two different business lines, like that being the launchpad and that being the DEX. That's not factoring in the fact that Pump.fun can further vertically integrate into like new applications. Maybe it wants to build a front end like Axiom or Photon to capture more of its upstream fees. But I think like any way you slice it, this thing's going to be a monster. It's going to be a behemoth. It's probably going to be like a top asset by market cap in the crypto economy. And the only thing that can prevent it from getting there is just extraction. Like I think if they go overboard with the extraction, they don't give us an airdrop, which I think they will. But if no airdrop comes, if all they're doing is this token sale, if they're doing, I don't know, I think the number being floated around is 25% of its revenue to token buybacks. If that's what they're doing, everything else is basically piped to insiders and can't be controlled by like token holders / the community, and they give no further clarification on how that could evolve over time, then yeah, I think this market is now getting way too skeptical to reward that type of behavior. But if we're just using like revenue, project that, multiple, this thing is probably going to be like, I think we have it at $7 billion, but somewhere around that range of overall size. I don't know if you guys have any views on the level of extraction that we might see. I'm wary of it just because I think that will ultimately play into like how this token trades. My
mid-curve brain, is there multiple billions out there that are ready to buy a Pump.fun token? Like if they're raising like 200 million, then, I think there's plenty of money to go and buy that. But $1 billion, is that too much or am I overthinking it?
I think there might be. I don't know. It's early.
If you had $1 billion on the sidelines for Plasma, it's like, and Plasma, it's like, it's no. I mean, I don't know about the lengths of or like the progress on what the product is.
I think they're being very
Plasma's
strategic.
Different because you get the money back. Sorry, Plasma's different because you get the money back. Like they're still only raising, I don't remember the number off the top of my head, like 50 million, and basically all that billions or I think it's like $1 billion now that's going into it, you get to redeem it on Plasma as USDT in like 2 months. So most of that money is coming back. Like it's not actually purchasing a token. So,
but there's money there.
Yeah, that's true. That's
like
true.
Ready to sling.
And that's all just going to funnel into Pump.fun. All right.
I mean,
the yield they got on that one bill is all going to Pump.
Yeah, I think the 4 billion number is very strategic. I think they set the bar low enough to where you could get some outperformance for early investors. Like I think if they were going off of fair value, they probably would have wanted to go launch higher. But I think they're trying to leave enough juice in there for the initial ICO buyers to make a little bit before it goes to market. And you have to remember that these guys are not just like going on Twitter and going, hey, like anybody wants some Pump token. I think like this thing's getting floated around to all types of funds, like all types of liquid funds, all types of venture funds. And who knows? I think it'll be like a good test of just how much hidden liquidity exists back there. But yeah, I'm on the fence. Like I'm not sure yet that it's just going to be like I don't think it'll be as simple as, oh, there's just not $1 billion out there.
So I feel like you would know better than I would on this. Like, do you think there are a lot of funds that cannot buy meme coins outright. Like whoever's going to be pissed off if they buy Farcoin, but now they kind of have this broad index exposure to the meme coin narrative. And they're like, okay, this is great. I can get exposure to the sector without actually going outside of what I'm kind of like mandated to buy or not buy. Do you think that like a lot of that money exists?
This is a fantastic take, Chris. You should definitely expand on this. I think this is probably the thesis that a lot of these institutional players have is how do we get involved in meme coins? What vehicle can we invest in that lets us get exposure to meme coins without actually going out and buying like Chill House on the open market? And so, yeah, I think you hit the nail on that.
It'll be interesting to see like what's weakest off the bat, like on TGE, because I mean you did see a lot of memes just immediately nuke on the headline. I feel like Spark coins recovered since then, but I'm not like I don't know if I don't think it'll be as intense of a liquidity drain as like Trump dropping, obviously, but I don't know. I could see a lot of volatility around it for sure. Apparently they just got banned on Twitter though.
Yeah, did the founder get banned too? Alon or whatever?
Yeah.
All right, guys, what are we doing on chain? What's looking good?
Chris, you sounded like
Yeah,
you were
so
ready to
We're all
go.
doing the same thing. Yeah.
Yeah. So I'm still playing around on Abstract. I just played this game, Death Fun, today. Super addicting. It's like this kind of like gambly casino game where you have different tiles that are covered, and then underneath one of the tiles is a skull that nukes you. So you have to go up these different tile levels in variable sizes and not hit the nuke one, and then you get a multiple on however much money you put in. So that was pretty. I ran it up a little bit on there. That's about it for me. I've just been continuing to do the Abstract thing.
I've just been looking for like random hyper EVM protocols to farm. There's a few perp funding ARB vault protocols. There's like one called Harmonics. There's another called Liminal. Yeah, I think those are cool. I mean, honestly, like if I had spare stables, these types of vaults are pretty interesting. Just have like a side allocation to. But yeah, outside of that, oh, one thing on hype, I don't know, not really on chain, but I was just thinking as we talked about REV and FDVs and stuff, but I feel like people using hype FDV is like unnecessary. like I think people are overestimating how the necessity for the team to like sell this like 10 bill over time. Like with a fleshed out EVM and all of these DeFi protocols, I actually think the team allocation is like they have a lot of ability to just borrow against their holdings and probably not sell as much as people are expecting. And I also think in terms of the community rewards, that whatever 30+% allo that's left, I feel like that's just going to be distributed pretty slowly. I don't think there's going to be like a massive one-time thing. Like they want to, this is like being built for super long term. I think they want to space out those incentives. And so I just feel like using FDV in that context, like I would rather think of it like probably max like 10% of that locked supply like will probably hit the market in the next year or two. I don't know. That's just how I've been thinking about it. I feel like that when you frame things as like, oh, this is like a 50 bill FDV, I don't think the comp is like that proper when you're compared to other things. I don't know if that
Yeah, I
seems
agree.
reasonable.
I mean, so they're also buying back like 10 to 15% of supply, like through the assistance fund.
Right.
And there's going to be all these like incentives to stake and lock up your supply. But like, well, what can we do? Like, it's just tough to use any other metric. I've been thinking about doing some kind of like metric apples to apples comp for like supply for a while. I think like if you want to take hyperliquid floating supply, yeah, I mean, I think you're right. I think there's going to be like a slow drip of whatever remaining supply exists as they come on live, and that probably will not. I think, for example, like Jeff would watch the assistance fund buyback rates closely to like adjust what happens with incentives. I think they're probably also paying attention to like how they want to manage the overall dilution on like a year-to-year basis. So I definitely agree with you. 50 billion is like a large number, but I mean the circulating is what, like 15. So the real market cap people should index to is probably somewhere between that.
Yeah, like I think people are overestimating like how much capital it will actually take to like double in circulating market cap. Like I don't think it's actually that much. Like when you frame it as 50 bill, it like sounds like, oh, like the best it can do is double or something like that. But yeah, Generally, also just briefly, just like one thing I feel like I'm seeing more is that people think hype is consensus. They think, oh, you're not going to make any money farming like the EVM because like everyone's already talking about it. But I feel like that heuristic of everyone talking about it is just like doesn't work because people talk about things and then just don't do anything because they're lazy. So that's kind of how I'm thinking about just using new things on the EVM. I feel like eventually it will be like a pretty good use of capital.
All right, Kenji, you hold anything left?
No, not really. I guess all I'm doing on chain is I'm all in on Sonny's CLOB thesis, so looking at CLOBs. Definitely still interested in Bitcoin Fi. So Plasma is kind of acting as a side chain. So it'll be interesting to see if Bitcoiners are willing to use that, or if we're going to have to wait for like an Alpine and a Citria and a BitVM2 to launch before that really takes off. Morpho launched their V2, which is cool. I'm a huge Morpho fan. I think they flip Aave one day. I don't think V2's the catalyst for that. I'm also not going to put a time frame on when they flip Aave, but yeah, mostly in research mode and kind of comfy.
Same. I'm all in CLOBs. All in CLOBs. Looking at Hyperliquid. Yeah, I don't know what else I'm doing these days. I'm just on Twitter a lot. I think I'm just chronically online. Getting into a lot of Twitter skirmishes recently. That's basically it.
Awesome. All right. Well, I think that about does it. Thanks for listening. Give a comment, give a like, subscribe if you're on YouTube. We'll see you next time.